Welcome, everybody. This is a Let's Talk Business on Tax, and hypnotherapist and tax and accountant, tax specialist David Cramer is now going to take us through everything, and I'm just going to shut up. But it really is Irish tax. So if there's anyone, we did have a special visitor a few minutes ago from America. We were wondering, was he going to claim Irish residency? But he decided to leave when he figured out that it wasn't. So, David, it's all yours.
Okay. Well, the focus is Irish tax. There will be a few points that people in the UK can take as well. I don't know. Have you anybody on from the UK, John?
No.
No. Okay. So because I could, we proceed on that basis then. Okay. First thing I'll say about tax is people have this mortal fear of it, right? For some strange reason, which brings me to this slide here. Now, which that not working for me. Yes, brings me to that one. The world's bravest man. He walks tight ropes, juggles chainsaws, wrestles alligators, and figures out his own taxes. That's what a lot of people will feel about tax.
Oh, not too sure.
Okay, but it really is. It is relatively straightforward. One keeps, but when one boils it down to simple language, okay, and it really can be nice and simple. Now, the agenda for this evening is simply this. First of all, we'll talk about VAT, a few things about that. Then we'll talk about capital gains tax, and then we'll talk about income tax. So they will all have specific points relative to the Irish tax situation. Okay. The next thing then about record keeping, the importance of keeping records and what you should keep. And then finally, some practical bookkeeping and administration tips that will help you. Okay. So first of all, VAT. VAT is a tax on sales or turnover. So it's based upon what you're charging your clients. Once you basically charge more than €42,000 per annum, you must register for VAT. So that's not a case of it's 42,000. Once you hit that 42,000 in total, you have to register VAT. No choice about it.
So can I ask a question? Will I hold the questions or will I ask as we go?
You ask as we go. Ask as we go.
Okay. So what if you hit? So if you hit 42,000 before the end of the tax year, what happens to all the stuff before it?
It's from the point you actually register.
Okay.
So I generally give the tip, okay, that I would divide 42,000 by 12. Okay. 42,000 divide that by 12 is about €3,500. So if you're averaging over a period of months sales of greater than 3,500 or more, then it's time to start to consider registering for VAT. If you're only hitting 2 or 3, not so much. But once you start to see yourself consistently hitting 3.5, then is the time to be thinking about registering for VAT. If that makes sense.
Yeah, but if you say hit 39,000, let's say,
yeah,
and at that stage you register, it doesn't have an impact going backwards.
No, it's only you register from a date in time. So you could be 6 months into the year, you suddenly find, okay, I'm consistently hitting that 3,500 mark. So then it's from that point on. So you suddenly look at your situation in July and you discover for the previous 6 months you've been 3,500 a month quite consistently. So then you would register from, let's say, the 4th of July on, basically.
Yeah. Okay.
Okay.
Yeah.
Now, the other thing you have to watch for, if you're providing multiple services, so let's say in my case, let's say my accountancy, my hypnosis, 2 different trades. I'm a sole trader. So once I'm hitting 42 in between the 2 of them, then I must register, if that makes sense. I don't get 42,000 for each individual thing I'm doing. So for example, if I'm a hypnotherapist and a Reiki practitioner or a pranic healing practitioner, it's not individual 42 to each, it's 42 in total, if that makes sense. Does that make sense, folks? Okay. Next thing then is the VAT rate applicable to hypnotherapy services is 13.5%. Okay. Exceptions. If you're a psychologist or psychiatrist, they're specifically exempt from VAT. So if you were, let's say, a psychiatrist or a psychologist or a psychotherapist, okay, and you have someone coming to you and you just happen to use hypnosis as part of your tool that you're working with them, it's exempt. If you follow what I'm saying there, folks. Next thing, VAT returns have to be done every 2, 4, or 6 months. Depends on how big your turnover is. The smaller the turnover, you'll get about every 6 months. The bigger your turnover, it'll be every 2 months that they'll want it for. Initially, they'll put you on 2 months to see what your level of sales are and the level of VAT returns are. The lower it is, they'll pare it back. It's in an effort to make the tax administration easier, if that makes sense. And with VAT, basically what happens is you charge VAT and you'll pay VAT on what you certain things that you buy, and you pay the difference over to revenue every two in that period, if that makes sense. That's VAT. Relatively simple. I do say relatively simple, uh, because there is always one or two little funnies that we come across in practice where people try to claim things that they shouldn't do, but that's another day's work and beyond slightly for our session here. But the point here is literally where your turnover is above a certain amount, you will have to register VAT, and the VAT rate applicable is 13.5%. They're the key things to really remember from this bit on VAT, if that makes sense. Anybody any questions on VAT at this point?
Sorry, just to say the exceptions rule. There's no way we can just claim to be psychologists or psychiatrists without having a
That's
degree.
that's where I think there's a registration body called Cora, I think, coming down the line, where if you're a member of a certain profession, I think psychology and psychiatrist and psychotherapy could be included in this. You have to be registered with them. Okay, so you have to basically show that you have qualifications and stuff in the area if you were to claim this. So, for example, I couldn't just go out on the road here now and say I'm a psychiatrist, a psychologist, a psychotherapist. Okay, I may have read a room full of books on it, but unless I have the paperwork to back up what I'm saying, and I have professional registrations to that effect, it won't. It's just and you're putting a name on something. Okay, if that makes sense.
Okay.
Now, yeah, that's it is. Okay, if that makes sense. Any more questions on that? If not, I'll move on. Next, the favorite one, capital gains tax. Okay. Now, with capital gains tax, why this is relevant is where you use your home and as a room in the house as your hypnosis studio or hypnosis room. Okay. Normally, your home is completely exempt from tax, but where you use any part of it, okay, for business purposes, it brings in an element of the house to capital gains tax where you eventually sell the house. So normally, we'd have our home, we'd be living in it, and if we move from one house to another, trading up or down, and if there's a gain on it, it would be exempt from tax. However, where we use a part of it for a business, let's say we use a room, that part then is charged with capital gains tax. So therefore, a portion of the gain that may be there in the house is actually chargeable to capital gains tax, if that makes sense. Now we have to be mindful of two things here. Let's say we have the house for 20 years, and for 10 years of it, it's been completely our private home. And in 10 years, we've used a room in the house. So that means literally we will have two calculations to do. So one half of it will be completely exempt, and for 10 years of it, completely exempt, and 10 years we have to basically apportion during over that period of time, if that makes sense. Now, That's if you use a room in the house. Okay. The gain or the exemptions extends to the house and lands of up to 1 acre. Okay. On grounds of up to 1 acre. If you, let's say, have a shed in the garden that you're using for hypnosis, there is an argument to say, well, the exemption is fully in there. Okay. And from what I can gather, if one is operating from a shed in the garden, what's called principal private resident relief is not affected, if that makes sense. Another area that can come to, sometimes people ask is, let's say you're renting a room out, okay? Because renting a room is not actually specifically a business activity or a trade, therefore it doesn't affect the principal private residence. So at the moment, there's this relief in income tax where if you rent a room out, you get a certain amount. That's tax-free. The CGT is not affected. Relief is not affected by that, if that makes sense. Does everybody follow that so far? That's brilliant. That's that. No.
Sorry, David, can I just ask? I understand what you're saying there about capital gains tax if you're running a business from your home.
Yeah.
Does that also apply for somebody who's like working from home, just using their laptop, like in an admin job, an office job? Because since COVID,
doesn't actually, that is specifically not covered. You're not actually engaged in a trading activity. Okay, so literally, what it is it's where you're not using, in that instance, you're not using a part of your house exclusively for the purposes of a trade, business, or profession. In that case, it's an employment, different scenario. Okay, that's being very, very technical, right? Okay, but that's what the legislation says. It's exclusively for the purposes of a trade. So if I'm just, let's say, for example, you've got, as like the working from home during COVID, that's not exclusively for a trade. Okay, that's for your employment. Very subtle difference. Does that make sense? Does that make sense, what I'm saying there?
Yeah.
Okay.
So even
David,
even if you're a therapist and you're only using your kitchen table, do you know what I mean? You don't have a designated area, but you're using a laptop, but you're doing online clients,
Right.
you're not exempt.
That's an interesting one.
can I ask a question which might help? And I don't know if it does or not. If you're not claiming relief, if you're not claiming any expenses for running a business from your home, then it shouldn't really come into the equation, should it? It's only the amount you're claiming, the percentage you're claiming.
That's the next animal that we'll be talking about. If you're claiming any expenses, like for example, home electricity, heating, that kind of thing. Okay.
Yeah.
Now the thinking would be that yes, if you're claiming that, that's going to bring you into capital gains tax straight away. Okay.
Yeah.
But now, if you're not, okay, we're into a little bit of a grey area then. Okay. Now, are you using part of your premises for business or not? Okay. Now, that's where, or you were saying like your laptop on the kitchen table. So how much are you of your home are you actually using in that case?
1 meter by 1 meter.
Exactly. So the calculations will get pretty ridiculous at that stage. What we're really talking about here probably is where, let's say you've got a room where people are coming to you physically. Okay. To be honest, that's really where it is. I'd say the tax inspector that kind of tries to go down, well, it's someone on a laptop doing online therapy or online meetings or anything like that of any kind, that's difficult. That would be difficult. Okay. Now, it isn't to say like if you got a quality inspector who got out of the bed on the wrong side of the day or whatever, right, during an inspection or whatever, or an audit, he or she might go down that road. I can't say they wouldn't, but it'd be, I doubt it, right? I doubt it. Okay. You really are talking a situation where you're using a room in the house. You know what I mean? And I would say that's probably becoming rarer these days. I'd say with Zoom and Teams and various things right there. Okay. As you say, it's most likely going to be a laptop in the kitchen table. You
So
know?
can I ask a question? If you were having a premises and you were operating your business partly from a room in that house and you didn't claim for it, you're saying it's still tax CGT?
Because literally it's what you're doing is you're using a part of your dwelling exclusively for the purposes of a trade.
Okay, I understand.
Okay. Because what the legislation says quite literally is where the gain accrues from disposal of a dwelling house or part of a dwelling house, part of which is used exclusively for the purposes of a trade, the gain shall be apportioned, and a particular subsection shall apply in relation to the part of the gain apportioned to the part which is not exclusively used for those purposes. So, in other words, that's saying that the bit that's not used for business gets the relief.
I understand.
Okay, so sorry, just
Yeah,
to clarify. We'll say I do Reiki, okay, and I've been to people who do Reiki from their own homes, and they're literally pulling out a therapy couch into their sitting room, so they don't have an exclusive part of their home. Are they exempt from capital gains? It's still their living room.
well, that's where we're going to be arguing in front of an inspector because it's what it says. What the legislation says is literally which is used exclusively for the purposes of a trade. Okay, and there's actually a case of a doctor who had basically a bit built onto the house, right? Okay, which was basically the house was the home. There was this little area built on that was the surgery. Okay, but there was a waiting room there. And because in the waiting room, the kids used to do their homework, the relief would extend it to that room. Okay. So there are ways and means, Orla. Okay. Um, so as I said, if it's the words is specifically exclusively, if it's not exclusive, there's elements there. There's scope, if you like.
So the best course of action is not to claim for your heating, electricity, whatever, because otherwise that is implied.
That would automatically bring it in. Okay.
Right, okay. Okay, so say for instance, I have done that for the last few years. I have claimed a certain percentage of heating, electricity, or whatever. Now I've only put in my accounts last week, and they're not even finalised. I still have a few things to add in. Am I better off to say to my accountant to take the heating and lighting out of that?
Depends upon how big your space you're using. Do you know what I mean?
Right, yeah.
If you're, as you said, if it's quite literally the kitchen table and the laptop is on the kitchen table, you would take it out.
I've just had a vision of panning Reiki clients out on the kitchen table and saying, "Well, no, this is where we have our breakfast. It's not exclusive."
Yeah, but you know what I mean?
Yeah, I know.
It's now obviously you meet Reiki clients as well in your home, so that's a different situation, you know. It's one of those
so I have in the garden.
Yeah, you're talking a very specific set of circumstances, Orla. Okay, like the legislation and everything
And
is.
the only reason why I'm curious is, I suppose the only reason why I'm so curious is because it's something that I've been thinking about is putting my house on the market.
Yeah.
So I'm kind of going making sure I have all my ducks in a row to do it now rather than something falling back on me later.
Yeah, it's as I said, my thinking would be, look, if it's a room dedicated, you're caught. Full stop. Right? Everything else is arguable because who's to say that you were or weren't doing it?
Yeah.
You know, and how long and how much were you doing it? But if you have a dedicated room there that's kitted out with a nice big sort of recliner chair for hypnosis, and then you've got a recce plinth, a good motorized plinth, in there.
That's just Orla's relaxation room. That's all that is.
That's what I'm thinking, actually. My meditation room.
Yeah,
And the whole family use it.
yeah. But then the argument gets harder, if you know what I mean. You know.
I know. I'm just kind of kidding. It's just to get my ducks in a row for the future, I suppose, so that I don't fall into any pit.
But like I said, the easiest one there, if the space was available, it's a nice shed out the back.
Yeah. Okay.
That's as far as my opinion would that I've seen and spoken to on this, that will be it. You know, because worst case scenario, right? If they did go after this, let's say the shed in the garden, you could always split the contract for sale in such a way. Well, hold on a minute. The house is this. That's what we're selling the house for, and we're selling the shed or whatever is separately.
Yeah.
That would be the way around that, you see.
Yeah.
If that makes sense.
Perfect. Yeah.
Okay. Nicola, shall I move on now?
Yes, please.
Okay. Okay. Yes, that's the home partly used for business exemption is restricted. Next, income tax. Now, I'll say this. A great man called Einstein once called income tax is the hardest thing in the world to understand. Right? I would slightly disagree with that. Okay. But anyway, we'll move on. Income tax. Most people have been an employee at some point in their lives, okay, and are familiar with the concept. Yes, they pay income tax to the pay as you earn system. The other things that bring you into the income tax system where you have to be self-assessed is where you have investment income. So this would be dividends or rental income, okay. But the one that brings you quite clearly into self-assessment is where you have self-employed income. Okay. And that is really where most therapists are going to be. They're going to be self-employed. Okay. Most likely. So what happens next? The next question would be is what happens with income tax? Well, you have to register as self-employed. Okay. Number one. The next thing with income tax is that you pay, the income tax year runs from the 1st of January to the 31st of December. The return payment deadline is the 31st of October. And we're coming fast up to that at the moment. And the pay and file deadline is extended to the middle of November where you pay and file online. The return is for the prior calendar year. So at the moment, I'm working on tax returns for the 2023 calendar year. Okay, does that make sense? And on that date, you have to pay any balance due for the prior year and on account for the year you're in. So I'm currently advising my clients that literally, okay, the tax, you still owe X amount for last year. Oh, but by the way, you have to pay them a little bit on account for this year. And you can imagine how well that goes down. And the payment is for income tax, PRSI, and universal social security. Any questions on that, folks? Very brief whistle stop. Next, what are you actually paying tax on? Well, you're paying tax on your profit. Okay. So how do you calculate your profit? Well, it's literally what you charge less your expenses. Accounting profit does not equal taxable profit because there are some expenses that we may consider being necessary in order to get business but are not allowable for tax purposes. I'll mention one or two of those later on. Next, the expenses. Generally, whatever you spend to do what you do, okay? So whatever you have to spend in order to earn that money to charge that fee, okay? So you're talking about if you rent the premises, your advertising, any insurance costs that you may have, like professional indemnity, R&D, property insurance, if you're, public liability, anything like that. Okay. Also allowable would be things like the usual level, things like stationery, subscriptions to things like Zoom or anything like that would be allowable. Okay. Also, the big one would be courses. You do CPD, so for things like the fee to the Irish Hypnosis Conference every year. Okay, that's a tax deductible expense. Okay. Um, if you're doing, like, for example, courses like with Carl Smith, or even if you're doing John's course now in 2 weeks, that's all tax deductible. Okay, if that makes sense. Now, what you're not allowable to claim for is personal expenses. Okay, so for example, things like holidays, clothes, household expenses, they shouldn't be put through the business. Okay, and if they are and they're caught, it will result in issues, if that makes sense. Next, certain expenses are disallowed. Now, mainly you are talking about things in entertainment. So, for example, okay, if you take, let's say you're going after some corporate work, for example, okay, and you bring out the CEO or the head of HR in some company, right, and you bring them out to dinner, that's not an allowable expense. Okay, it's entertainment. Okay, also things like parking fines are not allowable, or indeed, as well, if you've had to fall foul of our dear friends in revenue and you've had to pay them a little interest, that interest is not allowable either, if that makes sense. Next, certain expenses are allowed over time. So this is, let's say, where you buy, you have that little, let's say, that recliner chair that's cost a couple of €100, and you've got that laptop, right, that you're going to get used to over a couple of years. So therefore, you have to write that off or claim that over 7 years is the time period. That makes sense. Next, so you're talking about equipment. Next is tax reliefs and calculations. Calculations themselves are pretty mechanical, and reliefs, you're probably looking at the bog standard personal reliefs, okay, which leads to this. Yep. Heard any good jokes lately? Tax reliefs. There's very little of it out there, really, other than to get relief, you've got to spend, which is kind of, you're looking at pensions and stuff like that. If that makes sense.
Can I ask a question?
You can.
If I was going to London, is that for the UK conference?
Yes.
Is that tax deductible?
Yes, travel expense. Yes, you go to conferences and seminars, that's allowable. Okay.
So including the flights and the accommodation?
Yes. However, okay, there's a sting in that, right?
Oh, is go on.
Okay, so let's say you go to Vegas, right? Great, brilliant. Okay.
Why would I do that? And
Yeah.
go on. Yeah.
But okay, you spend a week or 2 weeks on the way back taking in the sights of, let's say, New York or something, right? So that's a mixed purpose trip. Okay, so an element of that could be considered disallowable.
And I get that. Absolutely get that. Yeah. But it was more the flights of flying to and from.
Yeah.
Or actually, what about because it will be relevant for people here, the cost of a hotel in Larne for a peer-to-peer training weekend?
Yes, that's allowable.
Okay.
Because it's an overnight, it's fully allowable.
And it's specifically CPD, so
exactly, you're having to travel to it. Okay, so that's
people money already. This call.
Yep. Okay.
Meals paid for on trips to away. Is that right?
Yes, that is allowable to an extent, but you just have to be careful you're not overdoing it. Okay. Yeah. Is the type of thing. And technically, if you're away, let's say we use the Las Vegas example again. Okay. So you're there, and usually your meals will be part of your hotel accommodation. Okay. And so literally that's fine. But if you go out to a restaurant, in theory, that's not part of the hotel, that in theory is disallowable.
But what if they're not part of your accommodation?
Disallowable in theory.
Even if they're not part of your accommodation?
If you looked at in strictness, okay.
I thought they gave an allowance per day or something.
No.
Only if you're a civil servant.
Only if you're civil servants.
Yeah.
Okay. Now, in terms of travel and subsistence allowances, okay, it's specifically stated you cannot, sole traders cannot apply the civil service rates for travel. Okay. So if we're driving, let's say, from Dublin to Cork to meet a client, okay, the travel expenses there have to be based upon actual expenditure, actual receipts. We can't say, okay, Dublin to Cork is so many kilometers at so many cent per kilometer.
But what about wear and tear in the car and all that stuff?
Nope, that's the way it works. Right, there you'll be claiming something called capital allowances on the car,
Right.
John. That's the some expenses are allowed over time idea. Okay. Now, that one, if that makes sense. Now, there's one or two questions come in on the chat box there, John.
Yeah, it was just, there was a second one actually. Hold on. Buying around for the bar is disallowed. Yeah, I
Most
think
definitely.
so. Yeah. Yeah.
Most definitely.
Yeah.
Okay. That makes sense. Okay. So we come on to the
Unless
next.
it was your dinner.
Well, yes. Buying around for the bar is slightly different there, John. I think we're saying.
No, it was actually your dinner. That was just a mistyping by whoever did that.
Rightio.
Right.
Okay. Next one is about record keeping. Okay. Now, I can't emphasize enough the importance of keeping records. Okay. Because that's where this slide comes in. Right. Okay. And believe it or not, this looks funny, but it is actually so very true. The number of expenses or stockets I come across where literally you've got coffee stains on them, you've got cement stains on them, all sorts of stuff. Okay. And sometimes that's the ones that they can find. Okay. I have a client, literally, I tell him his tax bill, and all of a sudden there's a bag of receipts coming in. Right? I get that literally every year nearly with this guy. Okay. So, next one. Good records. Why should you keep good records? First of all, and paper. You do need the actual receipt. It's not good enough to just simply say, oh, I did it. Okay. And the old saying here, or thing, an oral contract is as good as the paper is written on. In other words, it doesn't exist. Samuel Gold. Okay, very famous quote. Next. Good records, they save you time. They save you money. They can reduce your accountant's fees if you keep good records, because he or she doesn't have to be wading through bags and bags of stuff if they're kept orderly. And finally, and most importantly, they will save you tax. Because if you literally, as I says, if you have expenses that you've incurred to enable you to earn what you're earning, you can offset against that, against what you're earning. So it saves you tax, ultimately, if that makes sense. Some practical tips. Keep all invoices and receipts, including card payment slips. Okay. Next, you keep all paperwork in one place. Okay. So you're not sort of searching, the above the press in the kitchen or in the drawer in the car or whatever. Okay. And that happens. That does happen. Okay. If you're still using checks, write on the stub what the check is for. Okay, because there's nothing worse than coming back to a checkbook 6 months later and trying to figure out what that check was, what the check was for. Have a separate account for your business. Okay, there's nothing to stop you having all the one account, everything into one account. But if you have a separate bank account, your accountant doesn't need to see what your weekly shopping bill is, or even, dare I say it, your Paddy Power
He's
account.
actually on Zoom.
Sorry?
No. WhatsApp. But whatever link she sent, it was WhatsApp.
What? Oh.
All right, it's done there.
someone else. Yeah,
Yeah.
but have a separate account for business because quite literally, it just makes life a lot easier. Okay, for yourselves and your accountant. Okay, and copy your bank statements and note the source of lodgements and indeed bank payments out of them where you're making electronic payments. The number of transactions I see going to Amazon, okay, and I've no idea whether they're for business or personal, or indeed what they're for. Um, they could be advertising, they could be buying equipment, whatever. Okay. So right on the bank statement, literally what it is for, whether it's buying that, the advertising or whatever it may be. Use a reference system for invoice, a numbering system, or to help keep them in order. Okay. And every so often, you can just literally throw your paperwork in one place in a shoebox, but refile it or organize it every so often. Okay. It does help. Thermal printed receipts or invoices, things like parking receipts, copy them because they fade. And in about 3 or 4 months, by the time you're doing your tax return, that receipt could have faded. I've seen it many times. The other thing, you can just list your invoices is another thing on a spreadsheet or manually or wherever which way you feel comfortable with. Now, in terms of doing things sort of for cash and so on, okay, I would always refer to this quote. They can't collect legal taxes from illegal money. Okay. And the person who said that was Al Capone, Chicago gangster. And what was he put in prison for? Tax evasion. Okay. So literally it can be figured out if you're living beyond your means, okay, what your taxable income is. And revenue can go after and do go after that, if that makes sense. Now, and finally, I put up this quote. The only difference between a taxman and a taxidermist is that the taxidermist leaves the skin. That's how some people feel about taxes sometimes. You know, they literally skin you. Okay? And that, folks, that was by Mark Twain. And that's it. That's a bit of myself. That's my contact details. If anybody wants to send me questions, they can. And that's just a little disclaimer, so on, that being an accountant and tax guy, we would always put these riders in. In other words, literally, the information here is being sort of, it's been brief. We've done it in about an hour or so, or less. And so some of the questions have been briefly gone through. Everybody's circumstances is different, so there could be something pertaining to your situation that needs a little bit of more thought and consideration. And so that's why I would say, if it does, talk to your accountant and get fully professional advice. Any more questions?
Can I ask two?
You can.
The first one is, what if people have other income, i.e. PAYE, etc.?
Okay. That's it. That's the way income tax is taxed, is based upon your income. So it's like, the way I describe it is, it's like having a bucket. Okay. Literally everything goes into the bucket, right? Or sorry, better still, a funnel. Everything goes into the top of the funnel and out the bottom comes out what tax is due. So you're looking at your PAYE, you're looking at your rental income if you have it, you're looking at the dividends from the bank shares or the Aircom shares years ago, right? For those old enough to remember. And then your sole trade income. It just all goes into one pot. So you tot up all that income, you have your tax bands and the taxes worked out accordingly. That's how it works. Okay. People think PAYE is just a tax collection system. We've got two tax collection systems in the country, the PAYE system and the self-assessment system. That's it. The only real difference between how They operate is as one, the employer has the joy of deducting the tax and paying it over to the revenue for you, and the
And
other
if
one
you
is you
use
have to do it
it,
yourself, basically. That's it. That's the only distinction.
okay. So if somebody is working PAYE and it has self-employed income and they're using all their tax credits as part of their PAYE, then they're pretty much needing to take a certain percentage of their income and leave it off for when the taxman needs it.
Yes, that's one approach. You can mix the approach.
Yeah, okay.
So you can actually, what you can actually do is you can reduce your tax credits and bans in your PAYE income to an extent, so you don't actually have to pay as much over to revenue.
Yeah.
Okay. Now, some people, depending upon the individual and so on, that is something, and the level of income, that might be enough to basically meet all their liability. Okay. But if it's not, at least it'll help. It will literally help when October, November comes to pay the taxes.
Because it's what, it's 80% or something, isn't it? You have to pay 80% of what you expect your bill to be.
Okay.
I think. I could be wrong.
Well, you've got there's a method. This is the amount in advance you're talking
Yeah,
about.
that's what I'm talking about, yeah.
Yeah. So when you come to that, there's actually three ways that can be calculated. Number one, you can actually pay a bit by direct debit, but you have to. That's based upon having put that in place about 2 years prior. Okay, so that by November time hits, you've all the tax essentially paid. But if you don't, it's meant to be at least 90% of the
90.
tax bill, or what we do generally in practice is we look at the year before. So for example, for the 2024 tax and account that we'd be paying, let's say I would be paying for myself, I'd be looking at what my 2023 tax liability is, and I'd be paying that basically. So if my 23 tax liability was say 10 grand, that's what I'd be paying in preliminary tax. I might only have, let's say, €1,000 balance to pay, so I'll be paying 11,000 over to revenue in that case.
Yeah.
That makes sense.
And if you don't have receipts, but you have, say, Visa statements or whatever with stuff on them, what
If
happens
you have
then?
Visa statements, okay, yes, it's or even money going out of the bank directly, okay. My thought processes would be is yes, we go along, we put it in. But okay, if we take, for example, let's say we go to our local Apple Green or wherever and we buy our diesel or our petrol in the car, right? Okay, we put 50 quid in, but we can also take out 50 cash by cashback. Okay,
Yeah.
so that's where that one, if you get the smart arse inspector, will say, well, hold on a minute, there's €100 going out there. How much of that is actually diesel and how much of it is actually cash that went into your back pocket, that went into the pub? Do you know what I mean? So that's why I say keep all receipts. If one gets into the habit of that.
Yeah.
Yeah.
That's okay. Thank you. That's my question. So I'm handing it over to anyone else now.
2 questions, Dave.
Yeah.
When you have income coming in, say you're doing Zoom calls, Zoom therapy sessions with people not in Ireland. So they're in another jurisdiction and they're paying you.
Yeah.
How does that work?
Well, presumably, how are they going to pay you? Presumably, either they're lodging into your bank account, or more likely, they're lodging into your Revolut account these days.
Uh-huh.
So that's another bank account. Literally, one should be taking the income from those statements and returning it to the revenue. Now, in the event revenue will seek bank statements and so on, and they are now extending that to Revolut statements and Revolut transactions. Or I think there's one or two other Revolut-like places now that do the same sort of thing. I think N65 is one I've come across. I think something like that.
I've never heard of it.
But that's it. Like it's the Yeah. Once you get paid and the money is lodged into a bank account, you're really snookered, basically.
Okay. Yeah.
He's resident here, you see.
Right.
So
Sorry?
sorry, he's tax resident here, so therefore all income
Oh,
is
you're tax.
taxable.
Well, I mean, that's assuming you're living and based in Ireland. If you're, that's enough. We're getting really technical there now, John.
I know why you moved to Cork, the independent republic, to get away from all.
Yes. Some of the finest tax inspectors in the country are from Cork. You know, probably
Yeah.
are some of the most awkward. But anyway,
If you're PAYE employed full time, is there a threshold before you have to do a self-assessment?
yes, it's basically, from memory, it's about €5,000. So if you have income greater, it used to be 5,000. I'd have to check the precise limit these days. I think it may have gone up. But once it's below that level, it's meant to be coded into your PAYE. Okay.
Per
So
annum?
so you're meant to go to revenue and say to them, okay, right, I have this little bit of extra income, and they'll reduce your tax credits and tax bands accordingly to collect that. That's the way it's supposed to work. In practice, what a lot of people would conveniently forget to tell revenue, all right? And because there is no obligation on a PAYE worker to actually do a tax return, unless they are asked for one, you can imagine what used to happen. Okay.
Mhm.
But unfortunately, I think what is happening now is revenue are picking up on various things these days where people are doing um the mixers sort of stuff through advertising, like cards at the back of supermarkets was a good one. Okay. I'm sure we've all seen those where people giving grinds and cleaning houses and stuff like that at the back of supermarkets. The cars that used to go up. Some years ago, revenue went around supermarkets and they basically took note of all of those. And all of a sudden, you had people getting knocks on the door or letters in the post about that. Okay. So that's it, it's and that's how they were picking up on some of those small little things. If that makes sense.
Yep, perfect.
David, is there still, sorry, and just that I haven't been involved in a bit. There was a PAYE credit, and then they were meant to introduce a self-employed credit. Is that the same now as the PAYE credit, or is it?
It's called the earned income credit. Okay. It was basically at one stage, if you were self-employed and you didn't get this PAYE credit, about several years ago, it was Michael Noonan, when he was the minister at the time, gradually brought it in. So it's now at the same level. So literally, I'm now in the lovely. When I started doing this, I wouldn't have had any sort of PAYE credit or anything like that. Now I get an earned income credit, as it's called. It's the same.
If you do both, can you get both?
No, it's capped. So literally, I've seen instances where people wouldn't have enough PAYE to get the income to get the full PAYE credit. They'd have a bit of self-employed income. Between the two, they add up to the same amount is what they get.
Yeah.
That makes sense. Blaheen had a question there.
Hello, yeah, hi. I haven't actually started. I'm a full-time PAYE person,
Yeah.
and I intend to do a few clients.
Yeah.
I haven't registered, but I am interested in if I was to work. I'm planning on a few a week, whatever. But when or can I claim? I mean, I intend to go over. I attended the Irish conference, and I haven't been claiming. I've kept receipts, but because I'm not registered, is there a target? When does one decide that you're actually, like, if I see one client and say €100,
Yeah.
am I then eligible to claim for a trip to the Irish?
Yes, you can. Okay. What you're looking at there is a situation where, right, depending upon the number of clients that you see and the expenses, you could be in the position where when you tot everything up, you're not making money. You're making your losses. You're actually paying out more than you're actually getting in.
Which is
Okay.
what I'm doing at the moment because
Yeah.
it's
So literally in that situation, okay, yes, it can be done. You have a loss in that year, let's say. Um, there's things that you can do with that loss to offset against your PAYE income, by the way, to get tax back there. But the issue with that is eventually you have to start making money. Okay.
what's
Otherwise,
the threshold? What is making money? Is there a figure? You know what I mean?
there's no. It's literally there's no one figure for it. Okay. Like it's not a case of where you must have this amount to be paying tax.
Yeah, that's the
Okay.
question. Yeah.
It's
Okay.
it's that so that guarantees you that you're in it. Okay. If you're making profit, it's subject. It goes into the pot. Remember, I used the idea of a bucket or a funnel earlier on. So it's whatever your POE income is, whatever your hypnosis income is, goes into the bucket, and depending on what the total is, determines what the tax is. Okay. So literally, if the hypnosis income is, let's say, €1,000, and you've got expenses of, let's say, €800, that's €200 that falls to be taxed. If it is €2,000 worth of expenses, 1,000 worth of income, that's €1,000 of a loss, which in theory you can use to get tax back that you paid in your PAYE income. Okay. The problem is that if you're sort of if you're having losses for 3 or 4 years on the trot, it looks like what revenue would call a hobby and not actually a trade, and therefore say you can't offset the losses. Does that make sense? Does that
Yes,
make
and so you're saying I can retrospectively go back, but
sense?
they'll only give you a couple of years.
Well, it depends how far back, right? Okay. Now, if I was,
I
if
might
you're
contact you, would I?
sorry,
I'll perhaps reach out to you.
that's no problem. That's why the number is that. Like,
Yeah.
I think, they're on the video. I think I can actually share copies of these slides with John. Okay, and he can email them out to people. Okay. Um, not the version I sent you already, John. This version. Okay, because there's been a few changes since the draft version I gave you. Okay. I have no problem with that. I can actually, had I been thinking, I'd have had them done in a PDF and share them in the chat box, but I haven't at the moment. Okay, the current ones. But that's no problem, Blaine. Okay,
Thanks so much.
no problem.
Thanks.
Any questions? Any more questions?
Yeah, sorry. You mentioned there hobby. I know when I first started off, I could honestly say it was more hobby than anything else because I was actually spending more than what I was earning at it. And because I'm full-time PAYE, I wasn't taking in a lot of clients, whereas now I am taking in more clients, but I'm still spending a lot on training. So how does the tax office determine that that's a hobby or not? Surely you're allowed to have hobbies if you're declaring the income from it and then declaring it's a loss because of what you have spent on training.
Yeah, but that's the point. Like it's you would expect over time not to be making consistent losses.
Okay, so yeah, okay.
There's for instance, right.
Yeah.
1 year, like if we think of it logically, Orla, okay, we're out there, we have to make a living, so we can't be making losses year on year, okay. Now, are you talking about, now this is where it's your only source of income?
No, I am PAYE still.
Yeah.
So
that's the issue. So it's a question. So for example, if you're talking about, okay, this year I've made a loss, last year I made a profit, next year I'm going to make a profit again. That's within normal business parameters. Do you know what I mean?
Okay. No, I'm just saying, like surely, like it wouldn't be raising a red flag if you do have, because if like being PAYE, I don't have a big, huge chunk of time to see clients, so I would squeeze them in over a few days, so I would have a small amount of clients, but then I would have a lot of expenses saved for training.
Yeah,
Some months, shall we say, I won't say years, but some months I'm kind of like, oh my God, I've just spent more than what I've earned.
yeah, in that month or that.
Yeah,
Yeah,
exactly.
but again, what you're looking at there is a situation. You're looking at over the 12-month period, and over the 12-month period, you would hopefully it would balance out.
Yeah.
You know, now if it doesn't, that's what I'm saying. Like you're looking at a loss.
Mm.
But hopefully it wouldn't be each and every year. Do you know what I mean? Because if you're going along and doing it for 4, 5, 6 years straight and making losses, okay, they have to be funded. And that's where revenue will be coming in and saying, well, hold on a minute, like, what are you doing? Now, if you're not, there is something called loss relief, okay, where you can offset losses in a trade against PAYE income, okay? So if you were doing that for 3 or 4 years, that's where revenue are likely to come out and say, well, hold on a minute, Dave, what's going on here? Right? Okay. Um, because that's when the bells will be going off and saying, well, is this a hobby or what, rather than a trade? Does that make sense?
Yeah,
You know,
thanks.
that that's but as I said, if it's 2 years profits, 1 year loss, 2 years profits, or seesawing like that, and you've got a PAYE income, I wouldn't be overly worried about it. If that makes sense.
Yeah, yeah, that's perfect. Thanks, David.
Any more questions?
Yes, Dave.
Yeah.
Apart from training courses, what other legitimate expenses are taxable? Like clothing and things?
Clothing is specifically not allowable. Okay. Well, unless it's protective clothing. Okay.
Right.
Now there's a famous legal case of a barrister who tried to claim dark clothing, but no, that was not allowable. Okay. Now my caveat would be this, right? Let's say you, let's say John goes off and gets nice hoodies for himself, right? And blazing
Mhm.
Gnosis conference on it. They would be allowable on the basis of
Right.
advertising. Okay.
Okay.
But if I go out, like for example, me being an accountant, if I go off and literally I buy my nice 3-piece suit for meeting clients and so on, that's not allowed. But if I was to
Yeah.
get, let's say, a sweatshirt and blazing with Cramer and Company all over it, that's advertising, potentially.
Right.
That's,
Very good.
I think John has fallen asleep, has he?
I'm listening. I promise.
I,
I'm right here.
righty-ho. So any more questions or queries?
Sorry, David. I ran to the loo and I legged it back. I just caught the tail end of that last little bit. What about, this is slightly away from hypnosis. Obviously, I run a gym. What about runners, me trainers, claiming for the shoes that I wear to work?
That, again, I mentioned a case there, Sarah Jane, okay? It was a barrister, okay? She basically had to buy, because the rules of the bar dictated that she had to wear dark clothing. She argued that because she has dark clothing, okay, but that she wouldn't normally wear it, she's normally wearing bright. It's a lady barrister, she'd be normally wearing bright clothing. The judge held no, you have to wear them anyway because you need shoes or you need clothing. Okay, so that will be an argument there, right? Now, if you were to put in, let's say, depending on how many pairs of trainers you were buying a year, right? Okay, right. The odd one or two, I'd be saying, yeah, we'll squeeze it in. But every last pair, I wouldn't be claiming, or every last. Do you know what I mean? And then in your case, if you, let's say, you're saying you run a gym, so literally, if the trainers were, let's say, to be stamped with your gym logo, for example,
Yeah, I was thinking that, yeah.
okay, that's advertising, one would argue. Okay,
Okay.
does that make sense?
Yeah, perfect. Thanks for that.
No problem.
I have a question.
Yep.
What if it's a course on something that's not hypnosis, like marketing?
That's business related because that's putting you into a better position to be able to market what you're doing. Okay, so it's in terms of courses and that you do. You, as long as you can relate it to what you're doing, what it's enabling you to earn. Okay, so for example, I'll use myself as an example. I put the Irish Hypnosis Conference and the courses I do in hypnosis through my day job because it's allowing me. I'm studying communication. That's the tangent I go on. Okay, that makes sense. Now, if I was to go off and do, let's say, a baking course, for example, right? Or even, let's say, if I was to do dance classes, okay, right? That's not really related to what I'm doing. I can't relate it to it, okay? But if I'm doing hypnosis or NLP, that's all about communication, okay? It's allowing me to stand up or sit down in today's case and talk, basically, how to communicate. That's my argument with that. So marketing courses, if you're doing computer courses, anything like that, all allowable. So for example, even let's say, for example, we had a wonderful course here there about 2 weeks ago on stage hypnosis. In theory, that's allowable as well because it's adding to our skill set to be able to stand up in front of people and perform. Okay, if that makes sense. Okay.
Yeah, it does.
Any more question or query?
You done?
I think we are. We'll look at things.
Right, I'm going to stop record. So anyone got any last questions before I stop recording? 3, 2, 1.